Welcome to Orange US Stock Research. Today, we are taking a deep dive into FIGR Technology Solutions, trading under the ticker symbol FIGR on the NASDAQ. FIGR is a fascinating financial technology company that is fundamentally disrupting the traditional lending space by integrating blockchain technology into its core operations. In this comprehensive video analysis, we will explore the company's business model, its recent financial performance including the latest Q4 2025 results, and its unique competitive advantages. We will also evaluate the massive growth potential in front of them, as well as the critical risk factors you need to consider before investing. Finally, at the end of the video, we will provide a definitive score out of 100 and our final verdict on whether the stock is a buy, hold, or sell. Let's get started and see if FIGR Technology Solutions deserves a spot in your portfolio. Let us start with a detailed overview of the company and its origins. Founded in 2018 by visionary entrepreneurs including former SoFi CEO Mike Cagney and headquartered in Reno, Nevada, FIGR Technology Solutions went public recently in a highly anticipated IPO in September 2025. Currently, the company boasts a substantial market capitalization of approximately $7.5 billion. FIGR is not just another traditional non-bank lender. It is a true pioneer in building blockchain-native capital marketplaces from the ground up. Their core foundational product is a proprietary end-to-end loan origination system, commonly referred to as an LOS, which is built entirely natively on the Provenance Layer 1 blockchain. This cutting-edge technology is primarily utilized for their flagship consumer offering, the Home Equity Line of Credit, or HELOC. By leveraging the immutable nature of blockchain technology, FIGR records every single loan as a secure, tokenized, and tamper-proof digital asset. This revolutionary approach eliminates a massive amount of traditional, manual paperwork and reconciliation processes, thereby significantly reducing the time, friction, and cost associated with borrowing money for everyday consumers. They are effectively bridging the gap between complex decentralized finance technology and traditional, heavily regulated consumer credit markets. FIGR's business model extends far beyond just originating loans. They have built a comprehensive ecosystem. At the center is FIGR Connect, a distribution marketplace that seamlessly connects their loan origination system with a broad pool of capital markets partners. Once loans are originated and tokenized, they can be traded on platforms like democratized Prime. FIGR is also expanding its technological footprint with the Open Network, an ambitious project aiming to replace the legacy depository trust company clearing structure using blockchain. Furthermore, they have introduced the YLDS stablecoin, an interest-bearing digital asset that operates on popular blockchains like Solana and Sway, broadening their capital access. This integrated ecosystem allows FIGR to generate revenue primarily through volume-based fees from partners and users transacting across their various platforms, creating a highly scalable, capital-light business model. Turning to their financial performance, FIGR's growth trajectory has been nothing short of explosive. Looking at their annual income statements, the company reported total revenue of $506.8 million for the fiscal year 2025. This represents a robust 48.7% year-over-year growth, following an impressive 62.7% growth in 2024. More importantly, FIGR has successfully transitioned from a cash-burning startup to a highly profitable enterprise. Their net income for 2025 surged to $133.8 million, a massive turnaround from the $47.9 million loss recorded in 2023. Operating margins have expanded significantly, reaching 23.19% in 2025, up from just 2.7% the previous year. EBITDA also saw a dramatic increase, hitting $117.5 million. These figures clearly demonstrate that FIGR's blockchain-based model is not just a theoretical concept, but a highly efficient, profit-generating machine. Let us zoom in on the most recent quarter. The Q4 2025 earnings report presented a mixed but generally very positive picture. Revenue for the quarter came in at $157.6 million, representing a staggering 90.7% increase compared to the same period last year. Net income jumped 156% to $15.1 million, and adjusted EBITDA skyrocketed by 426% to $81 million. However, the market reacted with some volatility because the reported earnings per share of 6 cents missed the consensus analyst estimate of 13 cents. Despite this minor bottom-line miss, the company's balance sheet remains incredibly strong. FIGR ended the year with approximately $1.2 billion in cash and cash equivalents. Signaling strong confidence in their future, the board of directors also approved a massive $200 million share buyback program. Analyzing the balance sheet and valuation metrics, FIGR Technology Solutions is in a solid financial position, but the stock trades at a significant premium. The company holds $2.15 billion in total assets against $470.9 million in total debt, leaving them with a very healthy net cash position of over $626 million. This financial flexibility allows them to invest heavily in growth and weather potential economic downturns. However, investors are paying a high price for this growth. The trailing price-to-earnings ratio stands at a lofty 79.7, though the forward PE is more reasonable at 36.3. The price-to-sales ratio is elevated at 17.37, and the enterprise value to EBITDA multiple is 64.7. These valuation multiples indicate that the market has already priced in a substantial amount of future success, meaning the company must continue to execute flawlessly to justify its current stock price. What truly sets FIGR apart is its deep competitive moat, built entirely on blockchain efficiency. They currently command an estimated 75% market share in the tokenized private credit space. For consumers, the advantage is speed. FIGR's system funds a home equity loan in a median of just 10 days, compared to the industry average of 42 days. For their funding partners, the benefits are even more dramatic. On-chain loan registration eliminates massive reconciliation burdens, driving an 80% reduction in third-party review costs and an astonishing 93% reduction in total production costs compared to traditional mortgage origination. Furthermore, FIGR is benefiting from powerful network effects. They already have over 246 originating partners and added 78 new partners in the third quarter of 2025 alone. This first-mover advantage in blockchain lending infrastructure makes it incredibly difficult for legacy financial institutions to catch up. The growth potential for FIGR is staggering. Management has framed a total addressable market opportunity of $185 billion. Their core focus remains the massive $36 trillion home equity market, where their HELOC product is already gaining significant traction. But they are not stopping there. FIGR is actively diversifying its product offerings into non-qualified mortgages and auto loans. The most ambitious growth driver, however, is the open network, which aims to replace the legacy depository trust company clearing structure, a roughly $10 trillion opportunity. As the company shifts more volume towards its capital-light marketplace platforms, management expects profit margins to expand significantly. They are targeting a long-term adjusted EBITDA margin of over 60%. Up from the current 43%. With partner-branded loan volumes growing at a 74% compound annual growth rate since 2020, the runway for growth is massive. Despite the brilliant outlook, investing in FIGR comes with significant risks that cannot be ignored. The most pressing issue is a recent cybersecurity incident. In February 2026, the company suffered a data breach via a phishing attack, exposing the personal records of nearly 1 million customers. This highlights the severe vulnerabilities tech-heavy financial firms face. Secondly, shareholders have suffered massive dilution. The number of outstanding shares increased by 95.2% year-over-year following their IPO. We have also observed concerning insider selling, including a recent $7.29 million stock sale by a company director. Furthermore, regulatory risks loom large, as the rules governing blockchain financial infrastructure and stablecoins remain uncertain. Finally, there is significant execution risk as they attempt to scale into new lending verticals outside of their core HELOC business. These factors have contributed to recent stock volatility, bringing the price down from highs of $52 to around $35. Despite the recent risks and earnings miss, Wall Street analysts remain largely optimistic about FIGR Technology Solutions. Out of the 9 major analysts covering the stock, the consensus rating is a solid buy. Specifically, 22% rated a strong buy, 44% rated a buy, and 33% suggest holding the stock. Notably, there are 0 sell ratings. The average 12-month price target stands at $54.89. Compared to the current trading price of around $35, this implies a potential upside of approximately 56.5%. Analysts clearly believe that the recent sell-off following the Q4 earnings report and the data breach is a temporary setback, and that the company's underlying blockchain technology and rapid revenue growth will ultimately drive the stock price higher in the long run. It is time for our final evaluation. We grade stocks across 5 key categories to arrive at a score out of 100. For fundamentals and growth, FIGR scores an excellent 25 out of 30, driven by their massive revenue expansion. For competitive moat, they earn a perfect 20 out of 20. Their blockchain integration is a true game changer that traditional banks cannot easily replicate. Financial health and profitability gets a solid 15 out of 20, thanks to their strong cash position and transition to net income profitability. However, valuation is where they take a hit, scoring only 5 out of 15 due to the very high PE and price-to-sales multiples. Finally, risk management scores a poor 3 out of 15, heavily penalized for the recent data breach, massive share dilution, and insider selling. This brings our total score for FIGR Technology Solutions to 68 out of 100. Based on our score of 68 out of 100, our final verdict on FIGR Technology Solutions is a watch, with a cautiously bullish long-term outlook. Make no mistake, FIGR is a fantastic company with truly disruptive technology. They are proving that blockchain can solve real-world problems in traditional finance, and their growth numbers are spectacular. However, great companies do not always make great stocks at any given moment. The current valuation is very expensive, and the combination of a severe data breach, massive share dilution, and insider selling creates too much short-term risk to justify an aggressive buy rating right now. Our strategy would be to keep this stock high on your watch list. Wait for a better entry point, perhaps if the stock dips further into the low 30s, or consider a slow dollar cost averaging approach. Keep a close eye on how they handle the data breach fallout and their progress with the open. Before we finally conclude today's presentation, please take a moment to read the following legal disclaimer very carefully. This video represents our personal opinions and independent analysis only, and it is strictly intended for informational and educational purposes. It absolutely does not constitute any form of professional investment advice, financial recommendation, or an offer to buy or sell any specific securities mentioned herein. The stock market is inherently volatile, unpredictable, and investing always involves a significant risk of permanent capital loss. You should always conduct your own thorough due diligence and independent research, or consult with a certified and licensed financial advisor before making any major investment decisions with your hard-earned money. Thank you so much for taking the time to watch this comprehensive presentation by Orange US Stock Research. If you found this deep dive into FIGR Technology Solutions valuable and insightful, please hit the like button to support the video. Subscribe to our growing channel for more high-quality financial content, and be sure to leave a comment down below with your own thoughts and perspectives on this fascinating stock. We love hearing from our community. We will see you all in the next stock analysis video very soon.